What a week it's been. Quite a wild ride with volatility this week. Welcome back, Volatility. Glad to have that back. We're going to talk about Take-Two Interactive. We had a question from one of our viewers. We're going to talk about whether it is worth a buy or not. And then finally, we'll get into some put sales for next week and then how we did this last week. And with that, let's go ahead and dive in. As always, this is not financial advice. It is my opinion. All right, what do we have this coming week? Really? Not much. With the government shutdown, we're not getting any data. We're flying blind. We are in the dark. But Jerome Powell did speak on Tuesday, and he indicated they're going to slow down the balance sheet runoff. Let me show you what that looks like. We actually talked about this about 3 or 4 weeks ago and what balance sheet runoff looks like and why he's saying that. So here is the Federal Reserve's balance sheet. They have been running off their treasuries. They are the biggest buyer of treasuries. Jerome Powell actually said this last week that they're going to start pulling that back. And here's why, is because the money supply is starting to shrink. This is all of the balances in the banks and the reserves. When that dries up and it gets to about $2.5 trillion in the economy floating around in the money supply, you're going to see interest rates spike if it gets down to this level. This is what happened back in 2019 and the Fed had to intervene. What's happening now is this is starting to run off quite a bit. Dollars are drying up. Money's not as free as it used to be. And therefore, Jerome Powell, we mentioned this a couple weeks ago, they're going to stop their balance sheet runoff in the coming months. We don't know if it's going to be 2 or 3 months or it might be 6 or 8 months. I would definitely guess it's going to be less than 6 or 8 months. They're running it off at about $5 billion a month on the Treasury side. They're going to pull that back, probably stop that runoff. What that's going to do is it's going to be very positive for interest rates because the demand will increase. That'll be positive for things like TLT. That'll be positive for the 10-year. That'll be positive for mortgage rates. That's going to be positive all the way around, but it might take several more months. So I think you're going to start seeing a floor on the TLTs and on the 10-year treasuries. 10-year treasuries right now are around 4%, which means mortgages are around 6 to 6.5. You're going to start seeing that as we'll call it a floor or cap, however you look at it. But that cap, you probably won't see mortgage rates go much higher than they are now. That's going to be very positive. So keep an eye on that over the coming months. It'll be very positive for interest rates. And if you hold positions in TLT like I do, that will be very positive. All right, so we had a question from one of our listeners. I have a lot in Tesla, but I also have a lot in a stock called Take-Two Interactive. Could you do a video for me? Sure, certainly. So who's Take-Two Interactive? Take-Two Interactive is a company is a video gaming company. They started in 1993 and they make video games like Red Dead, Grand Theft Auto. That's been a big hit. They also acquired Zynga, think Farmville and Zynga Poker. And they also have games like NBA, 2K, WWE, and a couple others. So that's who they are. They're a video gaming company. A few years ago, they were making actually pretty good money. Today, maybe not so much. Before I go into Take-Two, though, let's look at the last 50 years. I found this slide doing some of the research, and I thought this was pretty cool. Going back to the 1970s and where the revenue is coming from. So you have arcade, you have consoles, and then you have PCs, handheld, and mobile. But going back to 1971, arcade adopts video games with early classics like Computer Space and Pong. And then Atari comes out, bringing Space Invaders and Pac-Man. 1982, Pac-Man is the highest grossing game for the 3rd year in a row. Nintendo launches in 1989 with Game Boy. In the early 90s, Street Fighter came out, Mortal Kombat. That's on your consoles. And then 2003, Steam launches. Steam has 120 million active users and generated an estimated $8.6 billion in revenue. That's in 2023. But that's when they launched. And then the iPhone comes out, launches as handheld. That's when it peaked. And then the mobile games really started taking off. So look at this red here, all this mobile. So you got Minecraft, GTA 5 is released, becoming the first and the second best-selling games of all time. That's your PC sales. Pandemic 2020, Among Us becomes a pandemic phenomenon as lockdowns push game revenues higher. VR is launched in 2016, and that's that little yellow. And so now VR gaming is $5 billion in revenue. So there is your video gaming revenue. Thought this was fascinating. So let's jump into Take-Two. All right, so looking at the net income and revenue for Take-Two. You can see going back 10 years, they're doing very well on the top line revenue. This is just overall sales. They're at 5.63 billion. But their net income has taken a hit. They were positive up until 2022, in which they acquired Zynga. And then they actually took a hit of $3.5 billion. And that was for a write-down of goodwill. So companies will have a thing called goodwill, and it's like kind of intellectual property, goodwill, all this like fluff, call it fluff stuff. And they will mark it up and say that the company's high because Zynga, that fluff wasn't as good as they thought. They actually wrote that down. So that actually was an impairment of $3.5 billion. So that brought them down to $4.5 billion in net income as a loss for the year. Looking at their price to earnings, they actually have a negative PE, which makes sense because they're not making any money right now. So what you can do is another valuation metric is price to sales. So we'll look at price to sales. They were, by the way, back 5 years ago, they had a positive PE. This was actually really good. All right, here's their price to sales over the last several years. You can see they were very high. So this is basically the price of the stock compared to their revenue. And you can see the higher that goes, the more stretched it becomes. There it is at an 8.15, which is very high. Some of their competitors like EA, Microsoft wouldn't have that much in, let's take a look, EA. And EA is actually making money. Their price to sales is only 6.82. So just that right there is a little bit saying actually a lot higher than EA. They're one of their biggest competitors. Let's look at their shares outstanding because that also has an effect. So they issued a lot of debt, a lot of equity, a lot of shares to help pay for that acquisition of Zynga. You can tell back here, but they're continuing to issue shares. And what that does is that changes your numerator and denominator. So if a company is only worth, I'll just pick a number like 100 million and you go issue a bunch of shares, your value per share is going to be X. If you issue more shares, but the company stays the same in terms of value, you're going to dilute the shareholder and the price is actually going to fall. That hasn't caught up yet. And when you look at the stock price of Take-Two, and you can see that the price has actually increased. You have more shares, yet the price is still going up. This is probably related to the Grand Theft Auto expectation in mid-year of 26. So several months from now, they're going to release their new version of GTA. It's highly anticipated. There's a thing in the market called buy the rumor and sell the news. And I think that's what you're seeing happen here. There's a run up because there's all this excitement about GTA. What happens if it's a flop? What if it's not as good as they think? You're going to see the price tumble if that happens. Now, the price could still go up. I'm not saying that it can't go up to 270, 300, but it's overvalued at this point based on its price to sales when you compare it against the competitor, EA. So with that, look at what the analysts are saying. 26 analysts have looked at this, and they have the price as high as 316 a year from now, with the average right around where it is, 273. It's 261 right now, so 273, with the lowest at the 196. If you were to ask me my opinion, I think it's probably going to be down in this range. I don't see it going a whole lot higher because valuations are stretched. We saw the price to sales. I like companies that make money. Right now, this one has not made money in the last several years. So for me, it is a no. I would not buy this stock. I would personally stay away from it. And we'll see what happens. Let me know what you think in the comments if you agree with me or not. Let's take a look at the S&P. All right, the S&P, what a wild week. So we had last Friday, 3% drop. And then this week you had ups and downs. You had intraday moves of up to 2% each day. Some pretty wide ranges. Where it's headed next depends. It depends on what indicator you look at. There are some indicators that are saying that they're bullish. Then there's some that are saying it's bearish. Right now you've got this long-term trend channel that I drew out here that is showing it's at the bottom of the trend channel. You've got some seasonal effects that are coming into play. The last quarter of the year is usually positive. That's a positive. But yet on the other hand, you've got your put-call ratio. This right here is showing a negative. Your VIX forward curve is showing a negative. You have market breadth that's showing some negative. So it's really mixed right now. Let me explain what this is. This is a contrarian indicator. This is how many puts versus calls are being bought. And it's very noisy. You have a lot of these ups and downs, and that's just by day. You can have a lot of variability. So what you do is you take a 21-day moving average, and this is your black line here. If the market becomes complacent, you're going to have a lower put call ratio. People aren't buying as many puts. They're not scared. This is the time that when this starts to rise, you're actually selling the market because people were not as fearful. Then when people are fearful and the put call ratio is very high, there have been a lot of puts to a lot of calls, and this begins to roll over, that's the time to buy. Where we're at right now, and I've been doing this for several years, go check it out for yourself. It's a pretty decent indicator. It's starting to rise again. So there was a lot of complacency. We've been talking about that. There was no volatility. There was nothing in the market. There was a lot of complacency. It's now starting to rise. People are starting to get scared. There's a lot of volatility. I think my prediction over the next week or two, you're going to still see some volatility in the market. It could collapse, but this is good because I'm a premium seller. And when volatility gets expensive, like it is now, it gets very high, premiums get very expensive, and you can make some pretty decent money. So looking at the forward curve, this is also another thing. This is the front month VIX to the back month, and you can see that the front month is expecting more volatility than the back months. This is usually a negative for stocks. You want VIX to be in contango, which is, say, take this here, and this is contango when it's a normal curve. That's what you want to see. This is a negative for stocks. Also, VIX is above its 200-day moving average. That's a negative. But on the other hand, VIX collapsed on Friday, and that's known as a spike peak. And so when it peaked and then comes back down more than 3 points, that's usually a buy indicator. So at this point, if I were to predict, I have no idea which direction it's going, which is why I'm straddling the market, and I've got my puts and calls very wide, which is nice because in the past they were very narrow and it didn't give me a whole lot of room and there was nothing to really work with. Now I'm selling puts at about 4 to 5% down from where it is today and about 2 to 3% up from where it is. That kind of a range, and it's only good for 7 days. So actually it's good for this Friday. And if that collapses, then I get to collect all that premium. And I've sold those for about $550 a piece. As long as the market doesn't go south 4% and up 3%, you're making money. If it starts moving, then there's other positions that I have in play that will negate that effect. So overall, I don't know where it's going. I'm selling premium. I'm staying neutral. I did put some positions on like IWM. IWM, I'm waiting for it to get back to 235. It's been up and down all week. When it got back down to 240, I sold some puts at 235. Went up to 251 and then came back to 243. At that point, I sold 245 puts for just a quick play because I do feel like if I'm wrong and the market rises, great. I'll collect all that premium because I'm selling at 245. But if I'm wrong, I did buy a put at 240, so then that will work out in my favor where I may lose a little bit on that play, but I'm also collecting premium in some other ways. I know that's a lot. If you want a little bit more information, please just drop a note and I'll walk through each one of these positions. But sometimes I don't know how much detail I should go into in some of these videos, and maybe you guys get bored. I don't know. So let me know. But for the week, SPX was down. Everything else was up. IWM really did well. XHB, we had down 8% the week before. We're at 3.9 this week, so we took some of that back. I sold puts at 104. Those expired worthless on Friday. I will be selling more puts probably tomorrow at 104 because I think that's a decent support, and I don't know that it'll go a whole lot down, further below that. We'll see. In the meantime, I will sell some premium on that so that I will get, my break even should be like 103. So then I'll pick up XHB at 103 where XHB today is 107. TLT, you might find support at this. It's in that 50 range, $91 range. Had a good week, partly because of what Powell said. If they are going to stop that runoff, that means there's not as much supply coming into the market from a treasury perspective. That'll be very positive for rates, and you'll see mortgages fall in the next few months. XLU, utility stock, did very well, and so did data centers. So who knows where it's going to go? Here's what's going to happen. Watch volatility. That'll tell you everything. I do expect volatility to stay up for the next week. Finally, put sales. Take a look at this. I told you last week that puts were very juicy because of that fall on Friday, and were they ever? This week, I sold puts on several of these. I sold puts on Netflix, BSX, Tesla, FCX, Caterpillar, and Amazon. Those are the ones I sold puts on. I tried to get into Nextera, but it moved away from me and became not very good for me by Monday. So I just let that go and just took positions on this. So let me show you. This week I got 14% on this part of the portfolio. 14.66%. Let me show you how I got that done. So Netflix, I put in a 11.50, 11.45 spread. So I had a $500 spread on that one, but I collected 30 cents. So that was a 6% play. I wrote that down on the wrong line. But Tesla, let's go into Tesla. Where's Tesla? Right here. So I did a 390 and a 387.50. So I risked $250 per contract, got 19 cents on that. So that was 7.6%. Caterpillar was 492 and 490. That was a $200 spread and made 29 cents on that one. So that was a little over 17% on that one. That one was beautiful because Caterpillar shot up the next day like 5 or 6%. I went ahead and closed it out on Tuesday. I didn't even hold it throughout the rest of the week. Amazon was great. And FCX, the other one that I remember last week I said premiums were really juicy. And the way I did that was I sold a $40 put and bought a $39 put. So I had a $100 spread per contract. I got 17 cents or $17 per 100. And that expired worthless. So I made 17% on that. I said I made 38. I messed up. That was on Caterpillar. I made 38%. It was FCX. I made 17%. So overall, a beautiful week. And every single one of these, I took no more than a $250 to a $500 position per contract. That way, my risk was limited. So all in, if you were to do one contract on each one of these, you would have risked $1,450 on the ones that I told you that I did, $1,450, but made $212. Not bad for a week's worth of work, right? 212 divided by 1450 is 14%. I'll take that all day long. So I'm going to do it again next week. These are the stocks I'm doing it on. I don't know which ones yet. Coinbase looks really juicy. Look at that, 4.41%. Again, I'll do probably a little bit better than that because I will be buying a put on the downside. Amazon, probably do that again. It doesn't report earnings until the week after, so I've got room to play that one. UNH, maybe. Corning, CVS. I don't know. All these look pretty good. And again, because the market has got a lot of volatility, premium's looking really good. So I will do this again, $250 to $500 spreads each. And then I'll pick up probably anywhere between $15 to $25. Let's say it was a $250 spread and I'm picking up $25 on that. On a $250 spread, that's 10%. And you do 10 or 15 of those, you're doing pretty well. So with that, the other thing I did is Volatility Crush. I only did that on United Airlines and I made 6% on that one. Go back and look at last week's video. I'll show you how I did that one. That's basically where I'm selling the front month and buying the back month. If you want more detail on that one too, please let me know. Send me some notes in the comments. Anything you want to see in particular, drop me some notes. Let me know. But this week coming up, not a lot with the government shutdown. We should be getting some data. Looking forward to seeing this one. I'm looking forward to seeing this one, the initial claims and inflation. But if the government stays shut, who knows what to expect. With that, thank you again. If there's something in particular you want to see, drop some notes in the comments. Let me know. I'm just exploring this and seeing what my listeners are enjoying seeing. So with that, put your questions there and have a great one. Happy trading. Be safe out there.